All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And in today's video, I wanted to walk you through how we're taking our overnight pop trade here this afternoon for Wednesday's expiration. This overnight pop trade is one that we've covered now for the last few months. We come in on Wednesday and on Friday for our options recap videos. And I've been walking you through how we've been taking those trades. But I've been covering those trades after the fact, right? I've been reviewing them after we've already closed those trades. Well, I wanted to come on here today and walk you through a trade in real time, trades that can be taken here yet this afternoon. I'll walk you through why we're taking the trade, how we're taking the trade, and how we plan on managing the trade as well. And best of all, today's trade is only going to require $150 per spread. So very reasonable regardless of your account size. So before I ramble on too long, let's go ahead and jump in so we can get this trade on here before the market closes. Now, SPY, it's one of those unique products that it has 3 expiration cycles every week. We have options that expire every Monday, Wednesday, and Friday. This type of a trade, we are looking to put on the afternoon before expiration day. Tomorrow being Wednesday, we are going to place a trade that expires at the end of the day tomorrow. We're going to place it here going into the close today, and then hopefully close it out in the first 30 to 60 minutes of the session tomorrow. Now, looking at a chart of SPY, this is a 195-minute time frame. You guys that have been trading here over the past 8 days, you have seen, and it's been an impressive rally on SPY, no doubt about it. And over the last few days, I mean, you can see it has hit a very overbought condition. Over the past 8 days, we have basically gone from around 384 on the downside all the way up to over 407 today. The high of the session today, 407.24. That's a big move. It's a really big move on SPY, especially considering that going into this move, the market was already at an extended level on the upside. Now, the way that we quantify the overbought condition, the pulse indicator down at the bottom is plotting yellow. The last 4 bars have plotted yellow over the past few days. That indicates prices between a 1 and a 2 standard deviation move on the upside. It does not mean that price can't move higher. It just means it's not statistically probable. Odds favor either a period of consolidation or a reversal in the other direction. Only 13.6% of all occurrences will fall outside of this range on the upside. So again, it's not that it can't happen. It just means price is tired here. We're probably due for a sideways to a potential pullback over the next few days. Now, we're looking over the next 24 hours. So could I come in and buy a long put here, expecting the market to pull back tomorrow? Sure, I could, but it's ultra aggressive. The only way I make money on that trade is if SPY makes a decent sized move to the downside. It's got to happen in a hurry, and it's got to be a big enough move, because time decay, with only 24 hours left to expiration, the time decay is extreme. Those options are going to lose value very, very quickly if you don't get a directional move in your favor. So instead of just coming in and buying an option, we're going to sell a credit spread, because a credit spread benefits from that time decay adding up. That time decay being so extreme actually helps us. So let's jump over to TastyWorks. I'm going to show you. I'm going to actually place this trade in my account as well. So inside of TastyWorks, and you guys can do this in any broker platform that you want. You're not limited to TastyWorks. It just happens to be the platform that I'm doing a majority of my trading in personally. So up at the top, we're going to type in SPY. We are going to go to the trade page. If you're not already on the trade page, we're going to click on the trade tab here. It's the vertical toolbar on the left-hand side. We're going to click on trade. And we're going to go ahead and open up the April 7 options. Those are the ones with 1 day left to expiration. I'm going to go ahead and open those up. Now, for this trade that we sent out here earlier this afternoon, we talked about selling a call spread. We sent this out to all of our members, and I'm going to show you what we did. We went out to the 407 call. Okay, it's this strike price right here. There is currently a 68% chance of that option closing out of the money at expiration tomorrow. That's exactly what we want to have happen. Okay, so I'm going to sell the 407 call, and to do so, I'm going to left click on the bid price of the 407 call. As I do that, it's going to box that line in red, indicating a sell order. Now, from our alert that we sent out to our customers, we also said that we wanted to buy the 409 call. So I left clicked on the ask price of the 409 call. It boxes it in green. I'm trading 2 options at the same time. I'm going to place this trade as a spread. I'm not going to do 2 separate orders here, one for the 407, one for the 409. I'm going to do this as one trade. Down at the bottom, it summarizes the order. You can see it's -1, That's next to the 407 call. So I'm selling to open the 407 call. And I am buying to open one of the 409 calls. Okay. The middle price here is at 50. It's kind of bouncing around between 51 and 52 cents. My alert that I sent out stated I want to get filled at 45 cents or higher. Okay, so obviously the mid price here is at 45 cents or higher. It's at 51 cents to be exact. So that meets our criteria. We can still place this trade. I can change the quantity. Right now it's set to 1. I can change it to 2, 3. I could, if you got a bigger account size, we can ramp it up. We could come in and put it on 20 times. We can certainly adjust the risk accordingly depending on the account size. Now the order type is going to be set to net credit. Okay, we're going to sell to open the spread with the goal of buying the spread back cheaper tomorrow. Okay, if we can buy it back cheaper tomorrow, we get to pocket the difference. The time enforced TIFs, it's set to day order. That's what I want. We want this order to cancel at the end of the day if we're not filled. Okay, so I'm going to go ahead and let's just change the quantity here. We'll start out with 5. I can always add to it here in just a moment. So I'm going to change the quantity to 5. And I am going to change the price here. We're going to go ahead and place the order at 50 cents. So I'm going to go ahead and review and send the order. And I'm going to send the order. So now the trade is working at 50 cents. I can come over to my working orders tab. And you can see up at the top, let me go ahead and get rid of some of the other stuff in there. We were only seeing the working order. Now my working order is at 50 cents. This spread is currently trading for 47 cents. I am not filled yet. So I have a couple of options here. I can either adjust the price right now. I can adjust the price lower down to 48 or 47 cents. And as I adjust that price lower, it increases my odds of getting filled. The problem there is as I start to adjust that order, I am not guaranteed to get filled. And I also give up some profit potential. Every penny that I move that order, I give up $1 of profit potential. Not a deal breaker. If you adjust the order now, it's going to increase your chances of getting filled. Again, doesn't guarantee it. It's just going to increase your odds of getting filled. Okay, so now we can see as I'm talking here, the market is selling off into the close. So now the spread is only trading for 43 cents. I have not been filled yet. So what I'm going to do is I'm going to right click on this order. I'm going to right click and go to replace order. I am going to adjust the price of this order down to 45 cents. Okay, my alert that I sent out to our customers earlier stated I want to get filled at 45 cents or higher. If I can't get filled at 45 cents or higher, I'm going to pass on the trade. I would rather get filled at a good price or not at all. So let's go ahead and adjust the price to 45 cents and click on review and send. And now we'll go back over to the activity tab and you'll see that my order is working here at 45 cents and I was just filled. And I just got filled at 45 cents. So now I'm in the trade. I sold the spread for 45 cents. That 45 cents that I collected is my maximum profit potential on the trade. My goal is to buy the spread back here. And sorry, guys. Got to turn the alerts off the phone. If you heard that message on my phone, I apologize. Trying to turn the alerts off here. So what we want to do is buy the spread back when I can keep between 50 and 75% of the max profit. If I can buy the spread back Wednesday morning for between 11 and 22 cents, that would be acceptable. That's a desirable range for me. So what I can do here, I can get my closing order placed yet today. That way the order is working for tomorrow morning. I'm going to go over to my positions tab. You can see my SPY position right there. I'm going to go ahead and click on that one. And it gives me a little drop down menu showing my exact position. Right now I am short 5 of the 407 calls and I am long 5 of the 409 calls. I am going to hold down the shift button on my keyboard and I'm going to left click on both of those so they're highlighted in gray. Again, all I did is hold down the shift button. While I was holding that button down, I clicked on both of those options so they're highlighted in gray. And now I'm going to right click on either one of them. Right click and I'm going to go to close and I'm going to select full. As I click on full, it's going to take me back over to the trade page where now I can set my closing order. I sold the spread a few moments ago to open up the trade. Now we're going to create a buy order to close it out here tomorrow morning. So I'm going to change my order to 11 cents. All I did is I just typed over the price that was there in that box and I changed it to 11 cents. The order type is a net debit. We sold the spread to open. That was done as a net credit. So now we're going to buy it back tomorrow as a net debit. Now, the time and force box, it's set to a day order. I'm going to click on that drop-down menu, and I'm going to change it to GTC. GTC stands for good till cancel. That means that order is going to remain in place until it gets filled tomorrow, or I manually come in and cancel it out or adjust the price of the order. Okay, so I'm going to go ahead and click on review and send the order. So now, if I go back over to my activity tab, you're going to see I have a working order in here for 11 cents. Okay, so at any point tomorrow morning, if we do get a lower open, if we get a sell-off tomorrow morning, like we talked about earlier, we're looking for that, I could potentially get filled at 11 cents. In most cases, these trades are going to be able to get closed out during the first 60 minutes of the session. Let's say I come in tomorrow and I don't get filled. Okay, we get a move in our direction, but it's not enough to get the price down to 11 cents. What I can do, this order is working, I can adjust the price of this order. To adjust the price, I can just right click on my working order here and select replace order. And I can come back to the trade page and change my price from 11 to 22 cents. All I have to do is change the price, click on review and send the order. So I could do that tomorrow morning if I don't get filled at my initial target price at 11 cents. I'm going to keep my order in at 11 cents. I'm going to keep it working for tomorrow. And now the trade is set to go. My worst case scenario, I was filled at 45 cents. My maximum loss on this trade is $155 per spread. That's the most I can lose on the trade. If I am dead wrong and the market continues to head higher for the 9th day in a row, I'm out $155. So I'm right around risk 3 to make 1. That is acceptable. I'm typically in that risk 2 or 3 to make 1 range. I'm okay with those numbers. I can make those numbers work. If I were to start risking 5, 6, 7 to make 1, I can't make those numbers work. I've got to make sure I can collect enough premium to make the trade worth my while. So again, I was filled on this section of the trade at 45 cents. It's trading at 43 or 44 cents. So I got a tiny little profit on the trade so far. I got filled in another account. Trying to look at one of my other screens. I got filled on one of my other accounts at 52 cents. So I've had the trade on a couple of different times here over the past 20 minutes. And I've been filled anywhere from 45 to 52 cents. That's my range that I've been filled at. Okay. And let me just check here. Hi, Kevin. Thank you for joining us here today. Just walking through one of our overnight pop trades using a credit spread. So we're trading options on SPY using a trade that we're looking to close out here tomorrow morning. So hopefully you were able to join us for the explanation over the past few minutes. So just to summarize, guys, it is a neutral to bearish position on SPY. We are okay. We're going to be able to book a profit on this trade as long as price stays below 407. Okay, the current price of SPY is at just under 406. So we've got about $1 cushion here. We can be dead wrong by about $1 tomorrow and we're okay. So as long as price stays below 407, we get to make money. And we make money from the time decay adding up. Potentially, if volatility decreases, that would help us as well. So we've got multiple ways of making money on the trade. We got 5 ways to be exact. So we make money directionally. If the stock moves up, down, or sideways, does not matter to us as long as price stays below 407. We also make money from the time decay adding up and from volatility decreasing. So those are the 5 ways that we have of making money on the position. I love these trades because they're so forgiving. Because we've got those 5 ways of making money. It's got a very high probability of success over time. Doesn't mean we're going to win on every trade. For those of you that have been able to join us over the past few months, you've seen we've had a very high winning percentage so far this year. It's a very reliable trade for us. And it generates a consistent source of income for us each week. It's not going to be a home run profit type trade. This is not going to be a trade that we're going to come in tomorrow morning and take a 500% return. That's just not the goal of the trade. Our maximum profit on this specific trade is $45 per spread. We typically will take between 2 and 4 of these trades each week. So for me, it's a way to generate a reliable source of income while I'm taking some of the more aggressive type trades during the rest of the week. The long calls and long puts, the debit spreads, the longer term positions. This is a great way to diversify. So we'll continue to track this trade here tomorrow. We'll certainly let you know when we're closing out of the trade tomorrow morning. I'll try to jump back on and just give a quick recap tomorrow morning. If you have any questions on this specific trade for tomorrow morning, you can certainly email me directly, mike@netpicks.com, or you can leave a comment here in YouTube or in Facebook, and we'll certainly get back with you right away. So any questions on the trade here from today, you still have a chance to grab it. If you have not been able to get the trade on, the trade is still doable. Here as we go into the close, we've got about 13 minutes to go in the session. I should point this out too, guys. If you're trading SPY, the index products actually trade until 4:15. You can trade options on SPY for an additional 15 minutes after the close. That's pretty nice. It gives us a little bit extra cushion there if we aren't able to get filled during that regular session. So for those of you that joined us late, let me just quickly review again the trade that we took here in real time. We sold the 407, 409 call spread on SPY. We're using options that expire tomorrow. Very, very quick trade. We're looking to take advantage of the extreme time decay going into expiration. So to sell the spread, I'll just review it one more time in TastyWorks. We left-clicked on the bid price of the 407 call. We left-clicked on the ask price of the 409 call. As we did that, as I left-clicked on the 407 call, it boxed it in red, indicating a sell order. As I left-clicked on the 409 call, it boxed it in green, indicating a buy order. Down at the bottom, it summarizes the order where you can see I'm selling one of the 407 calls and I'm buying one of the 409 calls. I can always change the quantity here. As I did earlier, you can always arrow up or down to give you a larger quantity, or if you want to reduce your position size, you can certainly do so as well. And then the price I sent out in the alerts, and I mentioned to our customers, I wanted to get filled at 45 cents or higher. So this mid price right here in the middle, it has to be above 45 cents in order for this trade to be valid. Okay, so it's kind of bouncing around right now. We've got a tiny profit on the trade since we put it on here earlier. So we would just adjust the price, make sure it's above 45 cents, click on review and send the order, and we're good to go. We created a closing order. Right now, my closing order is sitting at 11 cents. So going into tomorrow's session, if we get a lower open tomorrow, I'll be looking to close out of that trade for 11 cents. If I don't get filled at 11 cents, I'd be willing to adjust that price all the way up to 22 cents. So between 11 and 22 cents is my target range here for Wednesday's session. All right, so if you have any questions on that setup, let me know. Go ahead and get those questions in now. I will jump back on here tomorrow morning, walk you guys through how we plan on closing out of the trade. And then we'll also do our midweek options recap as well. So love to have you join us here tomorrow. If you have any questions between now and then, again, my email, mike@netpicks.com, or you can just leave a comment here in YouTube or on Facebook. All right, so trying to hang out here as long as I can. So we've got about a $25 profit so far on the spread. So small little profit so far, and then we'll continue to hold it here, see what happens going into the close. Let me just take a quick peek. Take a look here at the markets before we go into the close. So these are charts that I like to use intraday just to help gauge market sentiment. You can see in the upper left-hand corner, I've got these two green boxes, and that shows you the volume ratios on the session. It shows you the up volume versus down volume on both the New York Stock Exchange and the NASDAQ. Right now, both of those numbers are green. We actually have slightly more volume on the upside than on the downside. So the volume ratio is positive, but not overwhelming. Typically like to see that number at 2-to-1 positive. If we were on a strong trending day to the upside, I'd want to see that number at 2-to-1 positive. We're just not there. The advanced decline line in the upper right-hand corner shows you how many stocks are trading higher versus how many stocks are trading lower on the session. The NASDAQ advanced decline line is at -200. So we definitely have more names moving to the downside than to the upside. And then on the NYSE, the New York Stock Exchange, that number is sitting at 660. So we actually have more names positive than negative on the session. Very mixed market so far today. But what's crucial, what I want to direct your attention to, let me zoom into that lower right chart. This is just a 5-minute chart of SPY. The horizontal dotted lines, though, that's just a very simple pivot point indicator. just a standard indicator inside of Thinkorswim, nothing custom there. And then that solid blue line is the volume weighted average price. It will act as a magnet. Price is drawn towards that level. You can see we tried to break away from it on the upside. A couple times today, we saw price action pull back to that level. We tried to sell off early afternoon. What happened? We sold off, got extended. Price action bounced right back up to that VWAP. So price action is drawn to it. It acts as a more reactive moving average. But what I'm looking at here is going into the close with only a few minutes left to the session. I mean, look at how we're selling off. We're down near the lows of the session. So not only are the internals, the volume ratio, the advanced decline line, not only are those mixed, but price action after 8 days of impressive gains, very important to note that we're selling off into the close. That could very well lead to a lower open tomorrow morning. That would allow us to take that trade off that we just walked through for a nice profit. Now, am I expecting the market to crash here? No, not at all. That's not the goal of this trade. That's not what we're looking for. We are just looking for a much needed pause here tomorrow morning, much needed pullback, and we'll see if we get that here tomorrow morning. So let's take one last peek. So our spread is now down to 38 cents. So we're already moving into a nice profitable position. Price on SPY is trading for around 405.60. Remember, I need price to stay below 407. So we've got about $1.50 now going into tomorrow, where I can be wrong. Price can rally higher and we're still okay. So we're starting to see some things line up in our favor going into tomorrow's session. All right. So I'm going to start to wrap up here for today. Again, any last minute questions, let me know. Otherwise, I'll jump back on tomorrow and we'll see if we can take this trade off for a nice profit here tomorrow morning. So enjoy your afternoon, everybody. And we'll talk to you again here tomorrow for our next live session.